The halving is one of the most significant events on the Bitcoin blockchain. It causes inflation in the price of the cryptocurrency by lowering the number of Bitcoins in circulation and raising demand. Bitcoin halving has repercussions for all Bitcoin ecosystem stakeholders. Before we begin, don't forget to like and subscribe to this channel for more intriguing videos like this, and be sure to watch this video to the end. Therefore, anytime we upload a new video, you will be notified so you won't miss out on interesting videos from us. Without further ado, let's begin. Bitcoin network. To describe what a Bitcoin halving is, it is necessary to first understand how the Bitcoin network functions. Bitcoin's underlying technology, blockchain, is essentially a collection of computers or nodes that run on Bitcoin software and contain a partial or complete history of all network transactions. In Bitcoin's network, each full node, or a node carrying the entire history of Bitcoin transactions, is responsible for accepting or rejecting a transaction. To accomplish this, the node undertakes a series of tests to validate the transaction. These include ensuring that the transaction contains the proper validation parameters, such as nonces, and does not exceed the minimum length requirement. Each transaction is individually approved. It is claimed to occur only when all transactions within a block have been validated. The transaction is added to the existing blockchain and broadcast to other nodes after approval. Bitcoin mining. Bitcoin mining is the method through which individuals utilize their computers to validate and process transactions on the Bitcoin blockchain network. Bitcoin utilizes a protocol known as proof of work, or POW. This means that to be compensated, miners must demonstrate that they exerted effort in processing transactions. This effort consists of the time and power required to operate the computer hardware and solve difficult equations. The phrase mining is not used literally, but as a reference to the process of gathering precious metals. Bitcoin miners solve mathematical puzzles and validate transactions' authenticity. Then, they add these transactions to a block and generate chains of these blocks, constituting the blockchain. When a block is full of transactions, the miners who process and confirm those transactions are awarded bitcoins. To ensure security, transactions with a bigger monetary value require more confirmations. Bitcoin halving. Approximately every 4 years, or every 210,000 blocks produced, the block rewarded provided to Bitcoin miners for processing transactions is halved. This occurrence is known as halving because it halves the rate at which new bitcoins are introduced to circulation. This is how Bitcoin enforces artificial price inflation until all bitcoins are distributed. The halving event is significant because it signifies a further decline in the rate at which new bitcoins are produced when the overall maximum supply of bitcoins approaches 21 million. As of October 2021, there are around 18.85 million bitcoins in circulation, leaving just 2.15 million to be distributed via mining awards. Halving implications. Halvings reduce the rate at which new coins are minted, hence reducing the supply of new coins even while demand rises. This has repercussions for investors, as other assets having a limited or finite supply, such as gold, may experience significant demand and price inflation. In the past, these Bitcoin halvings have been associated with huge price increases. On the anniversary of the first halving, which happened on November 28, 2012, the price rose from $12 to $1,217. The second halving of Bitcoin occurred on July 9, 2016. The price at the time of the halving was $647, and by December 17, 2017, it had risen to $19,800. From this peak, the price dropped over a year to $3,276 on December 17, 2018, which was 506% higher than its pre-halving price. The latest halving took place on May 11, 2020. On that date, the price of a Bitcoin was $8,787. On April 14, 2021, the price of a Bitcoin skyrocketed to $64,507, an astonishing 634% increase from its pre-halving price. On May 11, 2021, a month later, the price of a Bitcoin was $54,276, a 517% gain that seems more consistent with the behavior of the 2016 halving. Halving and its effects. The notion of the halving and the chain reaction it causes is rough as follows. The reward is cut in half, inflation is cut in half, supply is reduced, demand is increased, the price rises, and regardless of reduced incentives, miners' incentive continues as Bitcoin's value increases in the process. If a halving does not raise demand and price, then there would be no motivation for miners. The incentive for completing transactions would be diminished and the value of Bitcoin would be insufficient. To prevent this, Bitcoin offers a method for adjusting the mining reward difficulty or the difficulty of mining a transaction. If the reward has been halved and the value of Bitcoin has not improved, the mining difficulty would be decreased to maintain the incentive for miners. This indicates that the number of Bitcoins delivered as a reward is still decreasing, while the complexity of processing a transaction is decreasing. This procedure has twice been effective. So far, the effect of these halvings has been a price increase followed by a substantial decrease. However, the crashes that follow these advances have kept prices higher than before to these halving events. As previously indicated, the 2017 to 2018 bubble caused the price of a Bitcoin to climb to approximately $20,000 before falling to approximately $3,200. Before the halving, the price of a Bitcoin was approximately $650.4. Although this approach has succeeded thus far, the halving is often surrounded by extreme speculation, hysteria, volatility, and the future market reaction to these events is uncertain. Not only did the third halving occur amid a global pandemic, but also in an atmosphere of heightened regulatory speculation, greater institutional investment in digital assets, and celebrity hysteria. Given these extra influences, it is uncertain where Bitcoin's price will settle in the aftermath. How does the halving Bitcoin affect the Bitcoin network? Due to limited supply and soaring demand, halving often results in higher prices for the cryptocurrency, which is excellent news for investors. Increased trading activity on the blockchain of the cryptocurrency in preparation for the halving. As previously proven, the rate of price increases varies based on the logistics and conditions of each price halving. The impact of mining on the Bitcoin ecosystem is complex. On the one hand, a declining supply of Bitcoin raises demand and prices. However, smaller payouts can also make it difficult for individual miners and small mining operations to remain in the Bitcoin ecosystem, as they may find it difficult to compete with larger mining operations. A halving event is characterized by a spike in price and can raise the likelihood of a 51% attack on Bitcoin's network as miners leave the network, so reducing its security. What happens when Bitcoin halves? The phrase halving about Bitcoin refers to the number of Bitcoin tokens in a freshly produced block. When Bitcoin was introduced in 2009, each block held 50 Bitcoin, but this number was slated to decrease by 50% approximately every 4 years. There have been 3 halving events today, and blocks currently contain only 6.25 Bitcoin. When the next halving occurs, a block will only contain 3.125 Bitcoin. When did the halve take place? On November 28, 2012, once a total of 10,500,000 Bitcoins had been mined, the first Bitcoin halving took place. The subsequent occurred on July 9, 2016, and the most recent occurred on May 11, 2020. The next is anticipated to occur at the start of 2024. Does halving have any impact on the price of Bitcoin? From its inception in 2009 when it traded for pennies or dollars to April 2021 when one Bitcoin traded for over $63,000, the price of Bitcoin has increased gradually and considerably. Since half the block reward effectively doubles the cost to miners, who are essentially the producers of Bitcoins, this should have a positive influence on the price, as producers will need to change their selling prices to account for the increase in their costs. There is empirical evidence that Bitcoin prices tend to increase in anticipation of a halving, typically many months before the occurrence. Bitcoin halving creates artificial price inflation on the network of the cryptocurrency and halves the rate at which new Bitcoins are released into circulation. The rewards scheme is planned to continue until the proposed 21 million Bitcoin maximum is achieved in 2140. Afterward, miners will be compensated with transaction fees. In 2009, the reward for each chain block mined was 50 Bitcoins. After the initial halving, there were 25, then 12.5, and as of May 11, 2020, 6.25 Bitcoins per block. The halving of Bitcoin has significant ramifications for its network. Investors should anticipate a price increase in the days leading up to and following the halving. Individual miners and small organizations may leave the mining environment or be acquired by larger entities as a consequence of the halving event. That's all for today, guys. I hope you enjoyed the video, and if you did, please like it and subscribe to our channel so you don't miss out on another wonderful video from us. Till next time.